Hey traders, last week was a masterclass in market deception. The VIX kept compressing, equities ripped higher, and yet, beneath the surface, commercials quietly doubled their dollar long position. That's not random. Add to that a 3% surge in silver. Altcoins are calling around the open interest. Look, the signal is everywhere if you know where to look. In this video, we will break down where the silver spot points next and why the dollar might be setting up for a rebound in 4 to 5 weeks. Stay tuned because if you trade off headlines, you will get freaked out. And if you trade off positioning, you will stay sharp. I'm Phil Moves, and if you're following my newsletter, this brings it all together visually. Let's get into it. For the VIX, last week we were calling for a continuous compression of the VIX, which is going to be supportive for equities prices higher. And that was exactly what we got. We made mention in the chart last week. We wanted the market to rally back higher into the opening of the new contract that began the 10th of September. That was exactly what we got. And upon the FOMC day, it was a drastic drop lower. We made mention of the risk if we were drifting anywhere higher to the 20th of August high, which we never got anything as high as that, which is good, right? Because we knew for sure where the market was poised to go down. And it was a beautiful price action to watch. So that's for the VIX. And this concludes our observation of what is to come. We want to continue to see the VIX continue to compress until we have reasons to doubt that that ceases to be the case. The next point of interest for us for the VIX now remains the next VIX expiration and the OPEX window, because that's how we use the VIX. The VIX is very, very important for us when we are thinking about window of weakness regarding the equity market. Now, from the FTC data, what do we see here that might be new? Nothing really, because from the 2nd of September, we highlighted the fact that we saw probably a temporal peak in the net positioning at 105, and the moment you're at 100. So that's like a 5,000 decrease. This is not alarming. If we begin to see very drastic drop like 10,000 to 20,000, then we know, okay, something is up and we have to pay attention. Until the next VIX expiration window, this should be a continuous grind higher for equities. Just make sure to be on side with the fundamental news outflow, and that should be the case. So this is for the VIX, and we wait for the next window to observe what happens in the VIX. That was a good one for us, being on side. Also, next is going to be NQ. What do we see in NQ? For NQ last week, we made very, very, very key observation. We were calling for the flush. Last week, we saw about 63,000 shots last week, and it was interesting for us to see how that might get flushed before the real move starts. And we called for a September 2nd star, which was this candle here. As you can see, September 2nd, we wanted a candle print like this for us to know that those shots get flushed out and the market should continue higher. And if you see the charts here, we had the exact same thing during the day of FOMC, and that precipitated the continuous grind higher on Thursday and on Friday. It was of no surprise when the market was gyrating lower. We made mention of the fact that on Tuesday was a contract expiry, the quarterly contract expiry on NQ, and we wanted to see if there was a gap or not for that to be flushed. And lo and behold, we had that gap. Typical thing you should expect is that this gap should be filled before any real move higher. And that was what they used the FOMC event to do and to move higher. We graded it according to the 0.25, 0.5, 0.7, 5, and the 1, and seeing how market kept grinding into all of that, then to swiftly reverse post the FOMC. And it was beautiful to watch. Like there's nothing, there's no issue here. We made mention of the fact that the easiest price action should come on the Thursday and the Friday post FOMC, and as you can see, this was a very clean move higher, keep grinding higher. That was for NQ. Regarding the following week, next week we have GDP and the PCE print. There really is no cause for alarm, even at this point right now. This is healthy for continuous grind higher. How fast is it going to be? I would say not as exuberant as we have seen, because since the beginning of the month of September, we can see that it has just been grinding higher. So it makes sense if we begin to consolidate and then probably chop around a bit, right? And digest the information from GDP and PC. So, what I'm trying to say is this: you see this kind of market environment here that we had in the month of July. Yeah. So it's not going to really be a very massive outsized movement higher, but it should just be the market digesting all the price action from FOMC, the sentiment, and all of that. So, anyways, this is a fantastic move so far because in the month of September, the market is up. This is the continuous contract, which is inaccurate. This is the current contract. It tells us the market is up 4.94%. So it's fantastic. Meanwhile, everyone was talking about the fact that September is the weakest month in equities and how that would have played out. And we kept saying, as far as the VIX keeps getting compressed, there was no way for the market to go down. And again, the market keeps getting compressed. All right. Next is going to be for the dollar. I think what is pivotal for the dollar here has to do with the fact that we cleared the July 24 low. Declaring this level has been something we have been watching to see if it will happen or not. And lo and behold, that was convincingly done on Tuesday with the retail sales. But see the sharp reaction we had following the FOMC Thursday and Friday. That is important because we know that this sharp reversals only means that they've picked up some orders. This was the low of the 1st of July, which is the quarterly, the Q3 beginning. Now, the reason why I don't believe this is actually taken out is that if we look at the dollar weighted, because this exaggeration of the low of July to be taken out has to do with the fact that DXY is euro dominated. But if we use the accurate weighted dollar index, which is this, you can see that the July first level is not taken out. So this is still supportive of our bullish thesis. Now, that aside, right? Because we were thinking maybe if we took out this level, maybe we'll not be bullish anymore. But the real truth lies in what we see in the CFTC data. So let's go CFTC data. This is the latest data. We called for the fact that if we should resume back above 20,000 short by the non-commercial, there we can continue our bullish thesis. Remember back in July, one of the reasons why we were very bullish in July was because the non-commercials were too bearish the dollar. What do you think happens when they are even more bearish now? Again, it makes for us to come back to the case that this is going to be bullish the dollar over the coming weeks. Now, this is the first week where we have seen this outsized movement, which is a 1 year high long commitment by the commercials. Another important thing to note is that on the 24th of July, when we were rolling into Q3, we had just 6,700 contracts. And now, as we're going into Q4, we have 13,500. That's double. Now you can't fake this. You can't keep being bearish on the dollar when you have this kind of massive flip in positioning. Doesn't mean right now we keep buying high and going up. No, that's not what we're calling for. We're calling for the next 4 weeks. We have to observe and see, do they continuously being bullish, right? So we can begin to see a consistent decline in the net positioning because we've noted this before that as far as we've reached a peak in net positioning, a consistent decline in net position is actually bullish price. What happens next week when we see 14,500? Now, 14,500 means it is higher. The more they keep increasing their net positioning, the bearish it is for the dollar. But if at this level now they begin to decline the net positioning, this is actually going to be bullish for the dollar over the coming weeks, and we will be watching that to see when that is the case. However, for now, we keep our eyes focused on the fundamental bearishness that lies ahead for the dollar, such as the GDP print, the PCE. If those come out bearish, then of course on the intraday level, depending on how the market sees that, that should be bearish the dollar. But we will keep watching for this over the next coming weeks, 4 to 5 weeks now, to see if the net positioning continues to decline. And the moment we have that, we have our signal. So that's very, very important. Another thing of observation too last week was the fact that we made mention that we had gaps in the major FX and we wanted that gaps to be filled. On Friday was the first day that gave us that taste of trying to fill up this gap. But then Monday and Tuesday, the market generated higher without filling up that gap. But we remain because that those gaps must be filled before a meaningful movement can be seen. Lo and behold, Wednesday FOMC, a sharp rejection. On Thursday, sharp rejection. And what was just the draw? The draw was trying to fill up this gap here. Now we're at 50% of the gap on the yen. Take a look at the euro. We are also yet to fill up that gap now on the euro. However, that was a draw that drew the market lower. So 3 days consistent drop. This was GBP drastic drop. drastic drop. What about the Swiss franc? Again, a drastic drop. So that was exactly the draw on liquidity. Do we see this gap? Do we see this gap filled up next week? At this point now, I doubt. Why? Because we have seen three consistent drop. We would expect that there should be a reversal on fourth and the fifth day. So that means that upon Tuesday close, we would begin to see bullishness come back to these majors, and later we would still fill up this gap. But for now, because we've had 3 days of consistent drop, we would begin to see a reversal thesis fourth and the fifth day, right? The fourth and the fifth day is actually a Monday and Tuesday close. So Wednesday, Thursday, Friday, depending on how the news comes out for the dollar, if it comes out bearish for the dollar, expect the FX majors to keep grinding higher. But don't have it, like, just have at the back of your mind that this gap must be filled at some point later in the future. So that's for the major FX pair. My favorite FX pair so far since June has been the yen. I've always loved the yen because it plays more akin to my anticipation than any other pairs. And so, as we can see that half of this gap has been filled now on the yen. All right, good. Let's see how the market positions going forward. I have not highlighted the yen in my reports because right now there has been a major cool off in the positioning of of the commercials and the non-commercials in the yen, and so it's not very exciting yet. So I always like to highlight it when I think it is quite exciting, right? The whole of August we didn't talk about the yen simply because we knew it was going to be a consolidation range. We didn't highlight that. However, on an intraday basis, upon Tuesday close, it was a persistent weakness on the yen. Okay, next is going to be what we think of Bitcoin. Bitcoin is interesting. Bitcoin has been consolidating throughout the entire week, and this is because of the fact that we have compression of the volatility of Bitcoin. This is the first time I'm talking about this. I think this deserves its own video. This has to do with the fact of devol. As far as they continue to compress the volatility of VIX, Bitcoin would not make any meaningful move. So I'll create a special video for my observation on what is going on with Bitcoin regarding the volatility. But as far as the volatility of Bitcoin continues to be compressed, this would suppress the price of Bitcoin. And this also coincides with the fact that we have very low in open interest. And the moment we have very low open interest, we should begin to see altcoins outperform versus the versus Bitcoin. So we're thinking about Solana, we're thinking about Ethereum, and that is why you can see that we have outperformance in Solana compared to Bitcoin. Ethereum has also been sleeping after its surge in August, and then now the leader is Solana. Now the key is this: if you want to massively gain, you have to be looking for coins that outperform Solana. But last week was actually a relatively calm week for the cryptocurrency majors, and it was more of a dispersion trade across other pairs. Nothing exciting to see here. On the weekly time frame, you can see that last 2 weeks ago we had about a 16% increase, and last week we had just for Solana. Last week we had just minus 1.84%. So nothing to cause. So there's no cause for alarm. It's all remaining reserved because we are calling for the fact that the moment we get the open interest back to 30,000, that is a sign for us to step aside and wait for more information regarding how the market is positioned. We had a rate cut already, and that is to be bullish for risk assets. As far as the open interest remains suppressed, we still remain on the fact that altcoins are where we should be for an outperformance against Bitcoin, and that continues to be the case. Next, GDP. GBP really was a disappointment last week. We didn't see what we wanted to see on GBP. This was following the rate decision on Thursday. It was a dovish hold in my own opinion. This was because those who voted for a cut increased by 1%. Those who voted for an unchanged for a hold decreased by 1%. So it's not hawkish enough for strength in GBP, and that's precipitated the fall of GBP against the euro. For GBP card, I remember last week we made mention of a particular level. We wanted to see GBP card at this level upon 17th of September. But 17th of September was we were somewhere here. So on Tuesday, we were somewhere here, which was far from our objective here. So because we didn't see price come down to this level upon that close of Tuesday, it was of no interest. We had no interest in the rate decision on Wednesday, so we just ignored this particular pair. And all this downside movement has to do with the fact that the BOE were actually dovish, not necessarily like it was a dovish rate hold. Okay, so those two were of no interest to us. Euro GBP, you can see the outsized reaction, and this continues to be the case. I think the euro is the favored pair now against the GBP. From the COT data, what do we see? We see a capitulation of the short. They have dropped from a whooping negative 33,000 to minus 6,500. So this is somewhat supportive of bullish price action on GBP, and they would continue to squeeze out the non-commercials, and this will support higher prices. And the question now is GBP bullish than euro? I disagree. The euro is a more favored pair against the GBP, so we'll be shifting our bias now to euro and find other crosses. Instead of trading euro GBP, I think euro dollar is better because we know that fundamentally the the bearish tilt on the dollar should continue over the coming weeks. I think the next 2 3 weeks, and by the fourth to fifth week, we should see that story change on the dollar. So for now, we remain bullish Euro GBP for outperformance versus GBP USD. However, let's take a look at how the positioning are for the Euro GBP. It's quite interesting. We were mainly bearish the Euro versus GBP because of this outsized commitment of short by the commercials. And what do we see last week? It has been halved from 15,000 short interest to a whooping 6,000 short. So this tells us that they flipped bullish. You can also see here in the percentage long too that we have suddenly increased from 33% to 55%. So this is going to support the euro against GBP going forward. Another thing of interest is the fact that we have reached an all-time one-year high in the euro GBP short by the commercials. This is the first time we're seeing that. Again, uh, when the commercials show us their hand, it doesn't mean we get positioned immediately. No, we have to see that positioning sustained over time. What do we want to see moving forward regarding the commercials? Regarding the commercials, what we would want to see is, since this is the most bearish they have been in the past 1 year, we want to see over the coming weeks how they begin to become more net positive. Meaning, if we begin to see numbers like negative 9,000, negative 4,000, this is actually a tell sign that the Euro GBP is going to reverse. But for now, that's not the case. For now, we are supporting the Euro GBP at performance. So we'll remain on that. Moving on to silver. This is our flagship trade for the week. Very fantastic price action. Upon Tuesday close, we were far from our September low target, September 4 target. We called for this level to be swept before we are interested in the longs. So come FOMC, they used that to precipitate price lower. Thursday was also there. But interesting enough, on Friday, Asia on Friday, we realized that there was a swift reversal. And not just that, and if you take a look at the 4 hours chart here, you can see that price was unwilling to keep on going higher, and then we breached this. The moment we breached this, this was a clear shift in market structure, and longs were permitted after this candle close. So, looking for entries from here to our target is the ideal case. So, we got position here. We got this at I think 3 a.m. We got entered at 3 a.m. So, and another entry again at around I think 7:30. So this is all setting up nicely. And where's our target? We are targeting the $44 mark for silver and 44.5. So this is due to the fact that we have a 6 month level high that is actually a draw on liquidity. So we want to see how price should get there. Can I find a way to show us that chart? So as you can see here on this chart, this is the 3 month candle. There's this high here, which is around the $44.2 mark. These are what are driving silver prices higher. Like these are the draw on silver prices. So we expect to see how price continue to gyrate towards that level over next week. Let's see how it plays out. So that's for silver. From the positioning perspective, we keep seeing as far as they keep suppressing the open interest, this is bullish for silver, and that is what we have begun to see last week following the shift in market structure on Friday. And since we are well positioned, we just hold and see if we get there. And I think that's for silver, which is nice to see how that plays out on Friday because we had a whooping increase in price on Friday. Let's take a look. You see, on Friday on the cash market, we had fantastic 3% move, while on gold we had just 1.11%. So in this kind of environment, we we really just want to appreciate what's going on silver versus gold. So next week we expect some level of normalcy to return back into the market, seeing that all the major events are gone. The pivotal key points are also gone, such as VIX expiration, the OPEX, and the FOMC. So we want to begin to see how the market continues to gyrate towards where we anticipate them to go. We want altcoins to go higher. We want silver to go higher. We expect UGPP to outperform versus GBP USD. So this is the framework we have in mind for the week going ahead. I think that's it for this week outlook. That's it for this week's COT outlook. If you found this helpful, like and subscribe. Drop a comment if you are watching any of these setups too. If you want to dive deeper, the full write-up is in my Substack, link in the description. Stay nimble, stay sharp. See you next week.